Please welcome Associate Partner at Glenbrook Partners, Drew Edmond.
Thank you, thank you. Welcome to your Masterclass on Embedded Payments. It's a bit of a lofty title, but we're going to live up to it. Really excited to be here today. As I said, I'm an associate partner at Glenbrook Partners. I love payments. I'm really excited to bring on our esteemed panelists in a minute or so here. We've got Geoff Lewis, who's the Vice President of Product Management at Procore, and Eduardo Vergara, who is Goldman Sachs's Global Head of Product and Sales. So really excited to bring them out in a minute here. We're going to talk about what is making embedded payments so significant. We're also going to take a glimpse at Procore's embedded payment product, which is called Procore Pay. A lot of P's in there. But it's a really, really interesting product that they've developed in partnership with Modern Treasury and Goldman Sachs. Before we dive in with them, I just wanted to highlight, embedded payments has become such an interesting and exciting element of financial services over the past few years, really. And I think that it's led to really a growth of a lot of companies that have started to embed payments and financial services deeply into their products. And that's really enabled by this expansion of partnerships between banks and fintechs alongside user-friendly software. So it's been really interesting to kind of watch the industry develop with these new kind of capabilities and features that folks like Modern Treasury and Goldman Sachs are enabling. So why are people doing this? Why are businesses embedding payments and financial services into their products? I'm glad you asked. There are some really deep value propositions that you get when you're able to embed payments into your products. There are things like faster sales cycles, better user retention, a more streamlined customer experience, and ways to expand and enhance your revenue streams. And Procore Pay, the product that we're going to talk about today, is really a prime example of that. And it was really enabled by Modern Treasury and Goldman Sachs partnership. So with that, please welcome to the stage Geoff Lewis and Eduardo. All right. Thanks, guys.
Yeah.
Let's talk. We'll start with you, Eduardo. Why don't we start with, where do you see embedded finance fitting into the payments ecosystem today, and how does Goldman Sachs work to enable that?
Sure, happy to. So, when we look at embedded payments and embedded finance, we see it as like one of the fastest growing areas of payments. And if you look at what's driving it, it's like just a very strong value proposition to both platforms as well as their end customers, small businesses, consumers. And from a platform perspective, it's really a great opportunity if you're a software platform that has a large number of small businesses in it there, right? It's an opportunity to, one, be more relevant to these small businesses, to your clients. It's an opportunity to engage them, to do more for them, to monetize those relationships. And then from a small business perspective, from the end customer perspective, it's also, there's a very strong value proposition around simplicity, right? If you're using a particular software tool to do your work, and then if at the end of the day, you finish all your work, and then you have to go to a bank platform, log on into a different bank platform to do a payment, and then come back and do a reconciliation. It's kind of clunky, right? So embedded payments just streamlines that process for a small business. And then from a Goldman Sachs perspective, I think the platform, the transaction banking platform, which is our payments and deposits and cash management platform, this is a new platform. This is a newer business for us. We launched it in 2020. And the big advantage that we had was precisely because we had never played in this space. We didn't have all the legacy infrastructure that you have in traditional payments and cash management platforms. So the platform that we built is a single global multi-currency platform. It was built API first. It was built everything on the cloud. Everything is real time. So that end-to-end API first kind of architecture makes it the use case of embedded payments a particularly good fit for us. So when we work with clients, when we talk to clients, embedded payments is a core part of what we're working and helping clients with.
Got it, yeah. When you have customers that are coming to you and saying, listen, we want to embed financial services, we want to embed payments, what are the challenges and the pain points that they're kind of coming to you with?
Yeah, that's a great question. It's not it's a very strong value proposition, but it's not easy to embed payments in a software platform. If payments are not core, so you've learned, right? If payments are not core to what you do, you probably don't have all of the infrastructure. I mean, part of it is integrate an API into your front end. That's just the beginning. There's a whole back office end-to-end operation that you need to set up to handle payment reconciliations, to handle rejects and repair payments. There's a whole bank connectivity piece that you would need to do. So it can be fairly complex, fairly expensive, and time-consuming to build all of that from scratch. So I think really when we think of the work that we do with Modern Treasury, what we set to do was to really address those pain points, right? Give a solution, a joint solution between Modern Treasury and Goldman Sachs that already takes care of that bank integration, already takes care of the back office operations, so you don't have to build it from scratch, right? It already gives you the tools to handle those payments, which are a core part of entering the space, and it significantly reduces the time to market and the cost to embed payments.
Absolutely. So Geoff, probably helpful to give everyone here like a little bit of background on who Procore is, why you built Procore Pay, and how you built it.
Yeah, absolutely. So Procore is a construction management software company. So think, there's all these construction sites around this property here in San Francisco. Most of those are general contractors who are hired by an owner to actually build the project. They then hire a bunch of subcontractors to come in and actually do the work. And Procore's historical business has been primarily selling software solutions to that general contractor. So managing blueprints, managing construction budgets, managing subcontracts. And so out of that, we've learned from our customers that there's a huge amount of pain around the way general contractors especially pay out their subcontractors. And so we didn't really set out to just move money, kind of to Eduardo's point. We just sort of listened to our customers and said, hey, what are your challenges when it comes to payments? And what's interesting is probably 85% of that challenge is actually not moving money, right? Now, fair, most of the general contractors do actually pay their subs with check, right? Mm-hmm. And it's like, okay, it's 2023, is that still the way we do it? But predominantly that's the case. That's not the biggest problem though. The majority of it is actually all this paperwork that has to be done before that, right? So, okay, are you billing for what was in the contract? Are you, withholding the right amount for retainage? And all these sort of construction-specific type things that create a huge amount of paperwork. And so, when we think of Procore Pay, yes, it's a money movement product, but primarily it's solving this gigantic paperwork pain. Mm-hmm. But the seamless simplicity of actually embedding the payment, right? So you take care of all this paperwork, and then the payment just sort of flows. That's what creates that magical experience. And that's why I think people have gotten so excited about what we're doing with Procore Pay.
Totally. What were some of the challenges that you encountered kind of throughout the product development process and the launch process?
Yeah, well, so I think Procore, we have a lot of experience building software products, right? So we're a tech company. And I think when you get into the fin part of fintech, it really, even using, Goldman's modern tech and using modern treasury, it still just exposes all of this complexity that we just frankly weren't used to dealing with, right? So, you have to get a banking partner. You have to figure out what rails you're going to use. And so one of the things we are dealing with Procore is really high value transactions, right? So think about some of these projects that are being done in this area. There are $100, $200 million projects, and so payments going out for these things are massive, right? Millions of dollars at a time, so no one wants to get paid via credit card, revocability, which I know is a big component of what what was in the FedNow conversation. All this stuff is massive. So you sort of start to peel back the onion, and there's a lot of details in there, right? And there's even operational concerns. I think the last conversation, started to expose some of those, but do we have the right compliance folks? Do we have the right payments operations team? So there's been a bunch of functions we've had to build out sort of on top of it. So I would say certainly the biggest challenge has been how do you change Procore to move sort of beyond just being a tech company and being ready to be a fintech company. So that has been the biggest challenge. And obviously we've had a lot of help. We've also, in the sort of build versus buy, tried to buy as much of that as we can, but even still, it creates a change in what the organization has to think about to be able to support this and move money at scale.
Yeah, so how do you kind of find some of those solutions, and where are you leaning maybe more heavily on a Goldman? Where are you leaning on modern treasury, and like how does that kind of tripartite relationship function?
Yeah, for sure. Well, so I mean, to give you a little bit more insight into how we've built it out. So we're using Goldman as our underlying banking partner to actually take care of moving all the money. Hugely important for us. We're not a licensed money transmitter, right? We don't, we need to be able to partner with a bank to actually move all this money. Our customers also care a lot about who has custody of those funds at all different times, and so the Goldman solution really helped us solve for a lot of things that our customers need on that front. The thing that Modern Treasury has helped us with is that, and no offense to your API, we haven't had to build anything against the Goldman API, right? We build everything against Modern Treasury, and then Modern Treasury in turn handles hooking up with Goldman. And so that's hugely helpful because not only is Modern Treasury working on our behalf to hook up to Goldman, there's many other Modern Treasury customers that are also using Modern Treasury to hook up to Goldman. And so there's a lot of leverage that Modern Treasury gets from really thinking about how to integrate these endpoints. This is also our first time doing payments. Modern Treasury does a ton of this, and so they can also bring a lot of value add to how exactly we should set up our code to interact with things. So that's been how we've generally thought about it. And then as we go, we keep running into things where we just haven't thought about a particular process. Like, we need to understand how to do fraud prevention or light KYC or all these different things. And our general approach has been to basically ask Modern Treasury, do you do that? And they either do or they're like, yeah, we'll do that. And so it's been great sort of working with them to help us offload a lot of that stuff. And so I think at least when I think of the Modern Treasury solution, it's moving more towards this. You want to launch a payments product, you're a tech company, but you're not a fintech company. How can you sort of buy those capabilities from MT? So that's been great. So I think what's been interesting is the tech has probably been the easiest part for us. And it's all the people things, getting the pay ops team, getting compliance, hiring new folks in legal to actually manage all that stuff, and then getting our CFO to sign off on all of it. That's been the fun challenge for us internally.
Yeah. Eduardo, I'm kind of curious. This is a little bit off script, but
Yep.
What has Goldman kind of learned from working with Procore and learning more from like the customer directly in terms of what needs to be built in the future, and how have you kind of adapted like through that process?
Yeah, I mean, it's been a great joint process, and look, I think anything with embedded payments, it's basically you're co-creating a product, right? And the way we always assume, the way we architect our platform and we think about our platform, it's not a set of products or a set of payment rails. It's more a set of Lego building blocks with which to build a solution, right? And I think what we've learned together is like, how do you leverage that to co-create a solution for your clients? And then you kind of come up with an MVP, you come up with like what you think will work, and then as you test it with your clients, you continue to learn and say, we hadn't thought of this, or we should enhance that. So it's been definitely a great joint process.
Yeah, I think that's right. I mean, there's all sorts of things we've thought about and been like, okay, this is how the wire drawdown is going to work. And then you test it with your first customer and realize their bank doesn't actually do wire drawdowns. And you're like, okay, back to the drawing board. And so there's a lot of things that are very iterative, both between the tech company in our case and the bank. And so I would say that, as we think about it, you're very much, it's called a bank partner for a reason, and you're really having to collaboratively develop that. And I think the more unique your solution, the more partnership there needs to be, the more kind of, all right, this is a proven playbook that this bank or this tech company has run a bunch of times. I think that becomes a little bit easier, but in our case, there was just a lot of uniqueness and newness to the product, sort of multiplied by that gigantic per dollar value of payments I was describing. So that partnership has been very important for us.
Yeah, I think we're in a kind of an interesting phase still with embedded payments and embedded financial services. Like there's the embedded payments on maybe like a software platform, B2C, and like relatively straightforward. There's been some like out of the box products built out there in the market. But I think with when we were going into this project, it was like, well, there's nobody that just does everything that we want, right? Yeah. So I think that partnership point that Geoff brought up is really important, because it's like we're going to have to build this together and kind of navigate this together. And Modern Treasury was a part of those conversations, and Goldman was a part of those conversations, and really trying to identify kind of what the best outcome was going to be and what the nuances are, because like you said, not every bank does Fed-wire drawdowns, and there's all these little nuances that you have to kind of uncover. Geoff, for you, for Procore, like what's in it for Procore here? Like what are the benefits for Procore of developing a product like this?
Yeah. Well, I think you mentioned some up front, right? Revenue, increased product adoption. I think what we're most excited about is creating a stronger network inside Procore, right? So Procore has historically been a software as a service company. And again, we mostly sell to general contractors. But what we've seen over time is that construction is a very collaborative sport. And general contractors use the product, and then they bring in their owner, they bring in the architect, they bring in their subcontractors. But a lot of times, those subcontractors are really just coming in to fill out a form and do their job and get out of there. With payments, it starts to kind of just change their connection to Procore, right? Now Procore is a place where they come in and their bank details are stored there. Procore is a place where they're submitting their bills to get paid. Procore is a place where they're getting money, and it starts to create a much stronger connection between Procore and these historically free collaborators. So one of the things we're just really excited about is how can you start to model this really complex real-world network inside our product, drive way more engagement, and over time that's going to create a lot more adoption. By the way, it makes our customer, the general contractor's life way easier. Creates this great avenue for us to potentially win a lot more customers through these subcontractors, and just starts to really reduce friction in that area. The other thing I would say is that because of all this paperwork craziness, because of the super high dollar value of payments being moved, payments in construction are super slow.
Yeah.
The sub does the work, 85 days later gets paid, right? So think about all the payroll they're paying in between, all the materials they're purchasing for this. It's wild, right? And a lot of times they're doing that on behalf of UCSF or on behalf of Meta or on behalf of Amazon, obviously companies that could afford to pay the subs much faster if it weren't for all the paperwork hoops that these folks have to go through. So I think the other thing we're really excited about over time is if Procore becomes the payment rails for how construction projects get paid, what can you do to solve that working capital problem, right? Are there opportunities to just straight up speed up that process, allow the owner to pay way faster, maybe for a discount? Are there ways to bring in third-party capital to help subs get access to capital much more quickly and grow their business? So, we're both excited to solve some real, immediate term problems for our customers, create a lot more network engagement, but also just start to think about how we can actually improve the lives of everyone in construction. And cash constraints are just a huge, huge concern for subs in the industry, and one of the reasons construction is so slow and expensive and risky, and so we think there's a big opportunity to kind of just structurally change and disrupt how that works.
Yeah. Yeah, once you start kind of moving money like that, you can start thinking about all the different financial services that you include in that experience that can make their lives better and
That's right.
and also obviously provide benefits to Procore.
Yeah.
Yeah.
Yeah, and it's if you're going to do that, I think we sort of think about it as you can't just go straight to disrupt. You kind of have to automate, and then you can disrupt, right? And so we're thinking very carefully about how you can start to make the interactions very valuable to folks, even if they're not, even if the network isn't fully built out yet, right? And once the network is fully built out, then that opens up all sorts of different downstream opportunities.
Yeah. This has been really great. Any last kind of final thoughts about embedded payments? Eduardo, maybe we'll start with you.
Look, I think it's still early days in it. I think as much, back to what have we learned? We co-created something, you solution, and because you find stuff you hadn't thought of along the way. But then even after you launch it, payments are changing so much. The move from checks to real-time payments, you have to continue evolving with that, and then just making it very easy to kind of integrate once and then handle all the different kinds of payments or other kinds of financial services eventually.
Yeah, I think that's right. Yeah, I think it's just like any other tech, right? Like the first version you launch with is never what you finish with. So we're launching with a pretty straightforward wire and ACH type model, but we were just listening to FedNow, and all the use cases that were being described, I was like, yep, we need that, we need that, we need that. And I think obviously there's going to be a time lag to getting that stood up, getting all the banks to adopt it, but that's going to be amazing for us, right?
Yeah.
So I think those are kinds of examples. And then I also think that as we're just trying to get closer to that network idea, what you're doing also evolves, right? So at the beginning, it's certainly a payments system. Can we get it to be a stored value system over time? And then that means a whole bunch of different things. You have to think differently about how the subs are getting onboarded and what information you're collecting about them. So, I think the thing is that you need to get something for that V1, but just like any other tech, you need to continue to iterate on it. But it's slower and harder, and the Fed gets involved and all these different things. So, but the same fundamental idea of launching something, getting traction, and then growing with it from there, you have to keep that in mind in the fintech context as well.
Awesome. Well, thank you. Thank you both. This was amazing. We're all masters now in embedded payments thanks to this masterclass.
Yeah, that's right.
Thanks a lot. Take care.
Yeah.